What's going on? Welcome back to the channel. So today we're going to talk to you about the most highly anticipated earnings for this upcoming week. So I'm going to go over the current estimates, implied move, what short's been doing, everything that you need to know. But first, make sure you guys hit that thumbs up. And with that, let's get right to it. So starting off with stock number one, you have Toll Brothers, tickers TOL, sitting at $123 and change. Over the last 1 year, it is up 20.39%. Over the last 6 months, down 2.48%. Currently, looks like it is slated for the 18th after hours, so that's the earnings. $2.05 for the earnings per share, and then $1.91 billion for the revenue. Over the last 90 days, 0 positive, 10 negative revisions to the earnings per share. And just to look at it a little bit closer, so that 205 works out to be negative 8.73% year-over-year growth. 193 the low, 219 the high. But even looking at Q2 2025, it is anticipated for it to be negative 28%. So future guidance is going to play a very big part in all of these stocks I'm going to be covering, whether the market sees it as a success or not. No different than what has happened over the last 2 weeks. Companies might actually hit the key metrics, but fail to give good future guidance, and they get slaughtered. So the market definitely is cutthroat, so something to kind of keep in mind. But aside from that, though, looking at the revenue, so that does work out to be negative 1.75% year-over-year growth, 1.8 the low, 2.03 is the high. So let me know your thoughts on that. Aside from that, though, the implied move is 5.72%. So that does work out to be roughly $7 in either direction. Historically speaking, though, even though they've had a couple choppy previous earnings recently, but generally they do beat. So historically, I think it is fair to assume that they will be kind of moving higher. One thing that I do want to bring up, I'm only going to bring it up once though, is just kind of pay attention to this section right here. So the 1 day long straddle, 1 day short, 1 week, and 1 week short and long. And so even looking here, it did go up 1 day after the move, 1.34%, and then it went up 17% if you did a 1 day short straddle. So obviously people love to do options, so highly recommend you kind of paying attention to that and all the other fun jazz. But looking at what short's been doing, they've started to return a little bit, so signaling maybe they do feel like Toll Brothers is going to be fairly optimistic and bullish. And this is where you could see some pretty intense moves, because if you see current expectations for it being very low, that does mean that they could easily far exceed that. And based on that kind of recent revisions to the earnings per share, analysts haven't been all that optimistic. So once again, this is where you could see a very nice move in the right direction. And sometimes you can't argue with historical data right here. So like I said, pretty much 90% of the time they do beat on their earnings, and the market sees it as a pretty big success. So once again, it is fair to assume that it will move higher. And just to give you a quick overview, so 3.3% of the free floats being shorted works out to be 3.27 million shares. Just for clarity, this isn't a squeeze play. Just bringing this up for analysis purposes, and I'll be doing that for the rest of the videos or other companies as well. Moving on, ETCY. So right now sitting at 57 and change over the last 1 year, down 24.92%. Over the last 6 months, up 11.07%. Earnings is slated for the 19th after or before the market does open. $1.46 is that earnings per share. 861 million for the revenue estimate. Over the last 90 days, 3 positive and 7 negative revisions to the earnings per share. That earnings per share does work out to be 20.33% year-over-year growth. Revenue does work out to be 2.26% year-over-year growth. And so this one, again, future guidance is going to play a very big part, but even just generally, the implied move is 9.81%, which is around a 6% move in either direction. Historically, they do beat, or at least the market sees it as a success day one, but then it does usually kind of fall. Looks like a couple days after for the most part. So it's roughly like a 50-50 or even a 60-40 likelihood that they will beat. But even looking here, when they do beat, they go up at least by 11%, 18%, 36%. Similarly, if they actually do miss, they go down like 11%, 23%. So I think this 9.81% is rather kind of timid in my opinion. So this one's going to be a extreme mover. Looking at shorts, they did recently return some shares. So once again, maybe indicating that they feel like there is more upside possibly. But once again, you can kind of analyze it a little bit more than that, or just overanalyze if that makes sense. But 15.94% of the free float is being shorted. So based on the market cap, definitely is rather heavily shorted. So something again to kind of keep in mind. So let me know your thoughts on ETCY. And as I go through these stocks, if you have price predictions, throw the ticker and your price prediction in the comments below. Can definitely go back afterwards and look at it, see if you're right or not, and everything else. But moving on, so this one's going to be a very popular one, and Carvana. So sitting at $285. So on Friday, did recently just hit a new 52-week high. So very impressive stuff over the last 1 year, up 426%. Over the last 6 months alone, up 100%. Looking at this, so the 19th after hours, 32 cents for the earnings per share, and then 3.34 billion for revenue. Over the last 90 days, 5 positive and 2 negative revisions to the earnings per share. The earnings per share, it looks like it is relatively, looks like no change for that. 7 cents for the low, 74 for the high. So it's kind of like a Russian roulette a little bit for that one. Looking at the revenue, that works out to be 37.94% year-over-year growth, and pretty good solid double-digit growth, looks like for the foreseeable future. 3.09 billion for the low, 3.5 is the high. The implied move for this one is 12.09%. And historically, this one definitely does beat. Roughly around, I'd say, like a 60 to 70% of the time. Most recently, though, over the last 5 earnings, they beat 100% of the time. So historically speaking, definitely it's good to be rather bullish on this one. And they don't play around. Like I said with the ETCY, it either hits big or it hits or misses big. So 15%, 39%, 51%. So this one is absolutely all over the place. So that 12% does work out to be like a 34% move in either direction. So expectations, on a side note, are very high on it. So potentially you could see some crazy swings, or again, if they do fail to give good future guidance, especially with tariffs and everything like that, you could see some extra maybe negative volatility associated to all of that. Giving you a quick overview of shorts. So right now, 9.25% of the free float is being shorted. Works to be 10.93 million shares overall are being shorted. And so I'll just hit refresh because Ortex doesn't seem to be wanting to work right now. So looks like we'll have to go through this blind. Actually, no. So generally looks like shorts have been returning a little bit, so that does signal that they are seeing more upside based on the earnings. But then again, if you kind of think about it, over the last 6 months, it's up 100+%. I'm sure they have some PTSD a little bit, but still, given that recent price action, for there still to be 9.25% of the float being shorted, that is rather high stuff. So let me know your viewpoint on that. Moving on, Walmart sitting at 104. Over the last 1 year, it is up 85.12%. Over the last 6 months, up 51.53%. So this, I don't think anyone anticipated this level of growth for Walmart. Like all the kind of old school stores and retail stores, they've had a surge, which is actually very unique. I know over the last couple of years, people were thinking that there's going to be a rotation out of all this. But yeah, Walmart's been doing absolutely amazing. Looking at the earnings, so on the 20th, looks like before the market, that is the earnings date. 65 cents for the earnings per share, 1.78 billion for the revenue. Over the last 90 days, you have 9 positive and 18 negative revisions to the earnings per share. And then looking at the earnings per share, that works out to be 7.75% year-over-year growth. 34 analysts kind of looking at that, and then that 178.83 billion works out to be 4% year-over-year growth. So we'll definitely have to wait and see what comes from all that, but a lot of retail stores have been giving good future guidance based on a lot of the recent data that's been coming out. So you never know, Walmart could continue its trend up and continue to hit 52-week highs. The implied move is roughly 4.39%, so roughly around a $4 or $5 move in either direction. Last 4 earnings, they have beaten every single time, or at least the market sees it as a beat. So historically speaking, it is fair to assume that there will be a continuation. Over the last roughly 11 earnings, it's only missed 3 times, and it looks like it goes down around like 4% to 8%. So definitely a lot more upside is anticipated. Quickly looking at shorts, they are not really doing all that much. If anything, they're kind of increasing, so maybe they do feel there is a little bit more downside with Walmart, but then again, 0.84% of the free float is being shorted. So once again, take that into consideration. So Walmart's definitely another one that you need to add to your watch list. Same for Alibaba. Currently sitting at $124 and change over the last 1 year, up 69.96%. Over the last 6 months, up 56.95%. Absolutely amazing stuff. I did buy this one at $83. Regrettably, I sold it only at $93. I wish I would have held it a little bit more, but I was happy with that. But yeah, this is absolutely amazing. Good data coming from China. On a side note, earnings is slated for before the market opens on the 20th, $2.67 for the earnings per share, 38.25 billion for revenue. That is absolutely insane. Over the last 90 days, 5 positive and 5 negative revisions to the earnings per share. This is the current estimates. So the earnings per share works out to be 1.83% year-over-year growth. A little bit lackluster, but analysts are forecasting for it to get back to normal for the foreseeable future. And then looking at the revenue, that works out to be 6.14% year-over-year growth. Implied move for Alibaba is 7.53%. That's roughly a $10 move in either direction. Historically speaking, roughly around 70% of the time, the market sees their earnings, despite the results, as a miss. So you can kind of see that based on this column right here. So historically, there's might be a little bit of a pullback, but then again, with the recent price action and everything, you never know what could come from that. And shorts, similarly, I think are reacting maybe based on recent data as well as just historical data, because they have started to really get in quite a lot. Obviously, Alibaba is not a squeeze play, but it went from roughly 1.94% to 2.49% of the free float being shorted. So shorts are starting to increase a little bit. Maybe it's in conjunction with the recent price action, or they do feel like their earnings might be a miss. Once again, do your own due diligence at the end of the day. And then last but not least, Rivian. So sitting at 1403 over the last 1 year, down 9.72%. Over the last 6 months, it is up 5.89%. Earnings is slated for after hours on the 20th. Negative 65 cents is that earnings per share. 1.43 billion for the revenue over the last 90 days. 5 positive and 3 negative revisions to the earnings per share. So that earnings per share works out to be 52.54% year-over-year growth. Pretty good stuff for that, based on 18 analysts. And then the revenue is working out to be 8.43% year-over-year growth, and that is based on 20 analysts. Implied move right now is looking at roughly 11.94%, and then that's around $1.60 or almost $2 move in either direction. Historically speaking, it looks like roughly around 60% of the time the market sees their earnings as a miss. A lot of volatility though, but even 2 weeks post earnings, roughly around 70% of the time it does go down. Nothing overly crazy, so roughly between, like, I'd say 15% on average for the most part. So you have some are like negative 1.95, negative 28. So it's all over the place, but I think on average, just guesstimating here, roughly around 15% negative is the downside. When they do beat though, it does generally move up fairly high. So once again, you're going to see a lot of volatility, and I think a lot of other stocks are waiting for Rivian to give their earnings, and then they'll react. So even Lucid as well. And I think definitely the market's going to be paying very close attention to their future guidance. If anything, they might actually forget and overlook the key metrics, earnings per share, revenue, and focus solely on what they're going to give for future guidance. Because under the Trump administration, EVs might not necessarily do all that great. Shorts, on the other hand, have returned a little bit, so maybe they are anticipating a potential beat. Rivian right now does have very low expectations for their earnings, but sometimes that doesn't always mean a good thing, possibly. But 18.8% of the free float is being shorted. Works out to be 139.88 million shares overall are being shorted. So these are the top ones that I feel are worth bringing up. Let me know your thoughts. Is there any one of these other stocks that you'd like a quick review of? I can definitely do another follow-up video on any one of these. So if there is, let me know your thoughts on all that. Don't forget to hit that thumbs up and subscribe. If you're looking for my price targets on all of these, pop over to my Patreon and get buy signals on stocks, options, and crypto. Many of them have been absolutely on point and bangers. Definitely worthwhile to pop over there and take a look. With all that, appreciate all of you watching.